Good afternoon this Thursday, October 17th, full moon today. The word lunatic comes from lunar, and we had a lunatic day today in the metals, the livestock, big swings, and the grain trade, big swings. Of course, last night's weakness again on the grains magnified with another Chinese finance minister not releasing any economic bazookas, as some like to say it. They learned it from the U.S. When they're going to do it big. Nothing done, so everybody's all deflated again, thinking raw material demand to China is going to be pathetic. So down we go in price. Yet today showed once we broke in price, big demand showed up, especially when corn stuck its toes below $4, immediately reversed higher. Soybeans, the deferreds, which continue to lose to the front, just like corn, is not indicative of an extremely bearish market. It's called bull spreading. We'll get to that in a second. And so anyway, we did see reversing higher, even the cattle market. Big losses in the morning, but the bids did show up steady on the cash trade, surviving for today at least, a cattle market rolling over, which will start to show on the charts. But first, let's take a look at the big bad boogeyman, and that's the weather in Brazil. Here she is, rain everywhere. Here is Mato Grosso, here is Mato Grosso do Sul, and Gaios. They're all getting rain. And we get a big old reversal on grains, and on top of it, we see on the grains bull trading. Here I did a quick snapshot of some quotes. First off, here's your corn. December corn up 2 cents today. In the throes of harvest with no rain anywhere, up 3/4 on March, down a penny on July. Now, of course, you could say, well, they're just fearful of deferreds. They're not going to ever sell any grain again. Well, if that's so, China ain't buying now either. Why is corn finding support? Is it possible that in the real cash world, the grain is not as overly abundant as the USDA is saying, and or is demand that much more stronger? And everybody wants to get their hands on the corn before it gets locked away in the bin. Beans up 9 on November. Now, one could argue, well, the bean harvest is wrapping up 4 in January, up 2 in March. I mean, this is bull spreading. Bulls wear their horns are on their head, not their butt. So what's going on here? If it isn't for the fact that maybe the grain is overly bearish for the value of beans with the rains in South America, with the thinking we're never going to sell beans again to China. And what else can I come up with? Europe is going to delay buying deforested beans for another year, so the heck with the U.S. Well, whatever it did, we pushed beans yesterday in an outside day format down right on top of the 78% retracement of the low made back in August to the high here made at the 1st of October. And of course, that's that first trading day of the month thing, right? You've seen that before. Well, straight down every single day. Here was a 0.5 cent higher than the previous day. Here's about a nickel higher than the previous day. And then, of course, implosion. And this morning, fell out of bed. The deferred contracts came within pennies of contract lows, whereas November, because of this bull spreading, did not get as close, and of course, reversed violently higher as soybean oil and soybean meal looking better. We have soybean meal bottoming well above their August lows. Got a 1, 2, 3, 4, 5 wave advance. Simple A, you can in the intraday charts, you see the A, B, C decline. Bottoming on Monday. Beans bottom today. And then we took out previous day's high, stalling at last week for the last part of week highs. Well, the point is, she has to get through this moving average resistance coming up at about 322. And we'll probably see it hit it, fall off, but we should likely see it continue higher as well because, the bean harvest probably wrapping up this weekend. The crush is beautiful. And if we do continue higher, in order to say that, I don't know if you've caught this before, I'll tell you, here's a head, here's a left shoulder, here's a right shoulder. Well, everybody will be happy, as you can see here, if the trend line, which is now called the neckline, is taken out. But you've got to get through about 345, 350, and that takes something significant to turn that and say that that's a guaranteed head and shoulders bottom. But just the same, we are seeing positive action. This could be a 1. This could be a 2, and it continues on the weekly charts. And into January, December, January, we get a 3. Now, you're talking about all the rain right now. How can that be? Well, this is like when it's raining in April. We had a winter drought, and it starts raining in April and May, and everybody's happy now. But what about July and August? You got to get through that. Well, for soybeans, given the delayed plantings, that's going to be after Christmas. That's going to be in January. And so there's a long time until you can say this record 169 million metric ton soybean crop is coming out of Brazil. Soybean oil. Someday, if we can have enough brains in Washington and the EPA to stop China from overrunning our used cooking oil business, to help keep bean oil in our fuel supplies, we could get something going here. But even here, bean oil bottomed back in August. And did we get a 1-2? And now it's a 1-2 and possible another move higher. It's interesting. Everybody's looking down on beans, and it's worked for them for now, for about a week and a half. So we'll see here. Bean harvest is wrapping up. The charts imply lows are already in. It's a matter of what's it going to take to get us to go higher. Corn dipped its toes below $4, outside day up. That's a bullish development. See the outside day down? That's a negative. Now we have an outside day up. That's a positive. Similar to this, outside day up. So is this implying wave 2 is possibly in right now? Maybe. I was thinking we could see a run at 97, but this outside day up certainly helps. And if we close higher on a Friday tomorrow into a harvest weekend, which sounds insane, but if we did, wave 2 is in. And I think we're going to start slowly witnessing potential wave 3 lift. Markets are talking. Cash markets are talking. The USDA has spoken, and that was then what? Back about here? Well, they've spoken for a while. We'll see what the cash market wants to respond in question to that. Wheat, well, hammering the moving averages here. 1 day below, holding over yesterday, and then climbing again today. Is that the bottom? I don't know. This would imply these wet legs are equal, but usually C's are extended. That's why I was thinking we'd see this 65 area challenge. But, we got a Friday close here back above the $5.95, $6 range here. This will start turning things, and maybe this too for corn. If corn's got a low, wheat probably has a low, and we could be starting our winter rally that typically runs into January, and then struggles from January into March, and then we get some kind of rally into April, peaking April, early May. That's just your typical seasonals. On cattle, we've been showing this for quite some time. We zoomed it out a little more so you can see it. Stalling at the trend line, sixth graders could have connected the dots and showed you this, and the cattle market's faltering at that 188 resistance we've been discussing, 188 to 189. Well, actually, we said more specifically 188.25, and that's where she did stall out at. Today came back, but it's not an impressive close. This thing is heavy up here. Get your LRPs in. Get your options in place. Something's happening here. And this is the intraday chart we showed you on Tuesday, a rally. We said if we rally back into this 187 plus area, might offer you some sales. It did, and we came off again. Feeder cattle. On the continuation chart, November stopped at the exact 62% retracement. Now for 2 days, we're banging on this moving average. Just like when it crawled back above it, it held it and then took off. Well, now we're hitting there banging on it, but if we ain't bouncing, then you're probably falling. So feeder cattle are weaker than live cattle. Feeders are the leaders. They've been strong on the recovery, I'll give you that. But as far as the recovery of the whole picture of pricing, they're the weaker one. And finally, crude oil. We discussed on Tuesday how everything is a series of ABCs. ABC, and then we had said ABC. We showed you that last week. Bottoming maybe today or probably something lower near the 78% retracement. That puts her down near $69 or at trendline support, something close to $67. Either way, a low is coming in here somewhere. Then we'll get an ABC up into that range resistance. What we're doing is we're apexing. We're going to work out an A, a B, a C, a D, and then an E. And the primary trend is down, so we should break out to the downside later on. And seasonally, we typically make lows December, January. This is Eugene Grainer with Heartland Investor Capital Management. Hope you find this information useful.